The crypto markets are still reeling from the crash of USTerra, but already it seems like there is another possibility of a black swan event fast approaching. And unfortunately, this would be orders of magnitude worse than the crash of USTerra and Luna. Of course, I'm talking about Tether or USDT. Looking at the 7-day chart for Tether, we can see that it held up remarkably well during the Terra crash, never deviating from its peg by more than 0.01 cents. But on May 11th, there was a dump of Tether onto the market that caused a dep-eg of more than half a cent. Afterwards, the price climbed up, almost reaching $1 before starting to fall. As it stands right now, the price is trying to climb back and it's hanging around a little bit over 1 cent down off of $1. While it's still early on and likely that Tether will regain its peg, I wanted to make this video for my subscribers, you guys, so that you can have an early warning about some of these things happening. In this video, I'm going to go through what has happened so far, why Tether crashing is even a possibility in the first place, and how you can protect yourself if this crazy black swan event were to actually occur. This pattern of the price stabilizing, dropping lower, and then stabilizing at a lower level is unfortunately very similar to what we just watched with USTerra. It's worth noting that the market cap of Tether is an order of magnitude bigger than the market cap of USTerra was before the crash. That market cap is over $80 billion. And while Terra was relatively contained to the Terra ecosystem, Tether is much more immersed in the entire crypto ecosystem as a whole. All of these things mean that a crash in Tether can be much worse than the crash that we just saw with USTerra. That said, the crash is also less likely because of the way that Tether works. If you own Tether, theoretically, you can redeem it 1-to-1 with US dollars with the company behind Tether. The CTO of Tether was quick to point that out on Twitter, saying that these redemptions are happening normally and always have been. He also went on to say that because of this FUD, some traders are making good money buying Tether on Kraken and then redeeming it at Tether's website for $1. If this redemption mechanism actually stays open, then we don't really have to worry about a Tether crash. But there are reasons to worry about whether Tether actually has the ability to pay out $1 for every Tether in existence. There was an amazing piece of investigative journalism in Bloomberg last October. This article was trying to track down where exactly Tether's assets are. Tether actually publishes a reserves breakdown on their website. Supposedly 83% are in a stable category, which is cash and cash equivalents, but looking towards the end, we can see commercial paper is included in this category. And of that 83%, 36% is in commercial paper and certificates of deposit. Basically, the worry is that a lot of these corporate bonds and this commercial paper can be from Chinese companies that are already underwater. This secured loans category could also be bad debt, and this other investments category, which includes digital tokens, is speculated to be Bitcoin, which, as you know, has crashed a lot in the last few days, and if there was a bank run on Tether, it would crash even more. This is one reason why the price of Bitcoin dropped about 2K the second that Tether lost its peg. There's also a lot of speculation about whether these audits are actually valid and about Tether's shady ties to Bitfinex and whether or not Tether used reserve money to fund some of Bitfinex's losses. All of these things are speculative, but the bottom line is that Tether hasn't been as transparent as people have wanted them to be, and that there has been speculation since the beginning that they might not be able to cover all of the Tether coins that are in existence. And like I just said, because Tether holds Bitcoin as part of its reserve assets, it's very possible that Bitcoin would be one of the main casualties of a Tether crash. If you look at the charts of Tether and compare them with the charts of Bitcoin, we get the low points in the exact same spot, and that initial break in the peg caused a lot of fear in the Bitcoin market. So stepping back, the real possibility for a crash in Tether would be if there was any hiccup in this redemptions process. So what can you do now to protect yourself if that happens? Because it would be catastrophic for crypto as a whole. First, one thing that I've already done and that I recommend doing is reducing your exposure to Tether. Unfortunately, Tether is embedded in a lot of the biggest DeFi protocols like Curve. Curve's liquidity is centered around this three pool, which has DAI, USDC, and Tether. Almost every other liquidity pair in Curve is tied to this three pool. A lot of the biggest pools on other DeFi protocols like Balancer also have Tether in them. I've always tried my best to avoid exposure to Tether when investing in DeFi, but this morning I went back and double checked everything to make sure I wasn't exposed. As far as stablecoins go, I think USDC is the best bet in this kind of market. They have all the benefits of Tether, except they've been much more transparent and much less risky with the reserve assets that they're holding. And you can see that the market actually agrees with this because the price of USDC has been dep-egging to the upside as people pour their funds from Tether into USDC. Personally, I also considered very hard which crypto positions I wanted to hold on to and what risk I wanted to take off the table, especially risk that had to do with Bitcoin. While personally, I still believe that a Tether dep-eg is less likely than the USTerra dep-eg, it would be catastrophic if it happened, so I'd rather be safe than sorry. Also in this situation, I'd rather own Ethereum than Bitcoin, and Ethereum is one of those crypto assets that I'd hold on to no matter what, and definitely be looking to scoop more of if Tether were to crash. While Ethereum does tend to be more volatile in these situations than Bitcoin, there hasn't been speculation that Ethereum makes up the Tether reserves, unlike Bitcoin. So it's something I would rather hold in this situation, with the understanding that it probably would crash as well if Tether crashed, just not as much as Bitcoin. Now, if you want to get extra involved, there are actually ways where you might be able to make money if Tether loses its peg. And I set up some of those positions this morning. I actually made a tutorial video on how to do this many months ago when I first became aware of some of the major risks of Tether. The simplest way to open a short position is to deposit USDC into Aave and then borrow Tether against it. And then you can trade that Tether back into USDC. If Tether goes down, you can swap back for a better price and pay off your debt, making money in the process. Although if you do that, I do recommend borrowing at a stable rate because if Tether starts to fall, there's no telling how high these borrow rates could go. I have a little bit more of an advanced strategy in that tutorial vid, so feel free to check it out. One thing that's also worth noting is that if you want to protect yourself or set up any of these short positions, you really want to do that in advance. If Tether starts crashing, there will be a rush for the exits and the gas prices on every network will go up. So it will become a lot harder to get your money to safety as the situation gets worse. Just like the Terra situation, I'm watching this very closely. So if you want updates, hit subscribe. Also, I have a video coming out soon explaining Do Kwon's recent Terra thread and discussing the future for Terra Luna. In the meantime, stay safe out there and I'll see you in the next video.